Good morning, everybody, and thank you for being here with us for the monthly update on the Hedge Invest Numen Credit Fund. First of all, Happy New Year to everybody. 2018 started very strong in the markets. We finished December on a positive note. On most of the strategy, we feel very comfortable about the positions that we managed to build. On the macro side, we remain convinced that the biggest pain available for the market at the moment is on an increase in interest rate, especially if driven by traditional drivers for inflation, such as wage inflation and the so-called Phillips curve. We remain positioned very opportunistically there. We think there's going to be more movements, and that was partly reflected on some of the trading we did in December, and that's still like a decent position for us beginning of the year. Away from there, on the macro side, we're still exposed via the UK credit default swap on the Brexit scenario. We think Brexit is obviously developing probably in the least positive way for the United Kingdom, and we think there'll be a lot of tension around the financial industry, but we'll see about that. Currently, CDS are only 10 basis points away from where Germany CDS is trading. Away from that, obviously the biggest focus on the macro side will be the Italian election and the perceived or associated risk in the market. At the moment, very minimal, I would say, but that could actually pick up in the next few weeks. Away from that, on the bank and financial side, we remain committed to our map and our strategy that we discussed last year. The focus, obviously, at the moment is to trade from a long side on the credit side. We still like very much credit obligations of financial institutions. We think there's a lot of value transfer coming from regulators to creditors, moving away from the equity holders. But at the same time, back to the macro picture, we think if rates are about to move, bank equity will probably be the place to be. We concluded successfully the Carige restructuring in December. We started on a very good note with the senior bonds issued by Carige. And obviously for the month, we're having a good month on the uses as of now. So we're quite positive on that side. Overall, the map is quite long on the credit side for financials, with the idea of moving eventually to equity. The credit side, the picture is a lot more mixed. I think there's a lot of leverage company that will start suffering, either because of rates and leverage and credit market being a little bit more discriminating, or alternatively, because of the technological pressure on some of the sectors. We're very much involved on names like Astaldi, Altice, Steinhoff recently, which is a new addition there for on our short side, on the short book. We think there's going to be probably plenty of negative surprise going forward, and valuations are extremely stretched. So like we said before, the position is still quite negative and unconstructive corporate credit, but positive on banks, with a very opportunistic approach on the macro side and the tactical side, which is what this month so far has produced the best results for us. With this, I conclude. I thank you very much for your time and patience. And again, Happy New Year, and hopefully we'll speak again in a month's time for the next update. Thank you very much.